Yo guys, what is good? I hope you're all doing absolutely amazing and are trading safely in the markets. I'm back with another video for you guys, and in today's video we're going to take a very close look at imbalance. Now specifically what exactly imbalance is, how to identify it on the charts, and how to implement imbalanced areas into your analysis. So without any further delay, let's get straight into the video. So first of all, what exactly is imbalance? Now, to really answer this question, we need to actually look at the nature of price action itself. So price can move in two different ways. You can have obviously efficient price action and inefficient price action. So let's start off with efficient price action. So when price moves in its usual wave-like manner, without any harsh or volatile moves, it's known as efficient price action. And we've got a little chart example here to show you guys as well. So as you guys can see right here, just looking at Euro USD, so what's known as efficient price action, you want to expect price to be moving like this, sort of up and down, filling itself in quite nicely in its sort of usual wave-like manner. This is what's known as efficient price action. However, when you see price moving very strongly, very impulsively, it's what's known as inefficient price action. So obviously, like here, like I just sort of demonstrated, efficient price action moving very calm and sort of in its wave-like manner. And then over here, we've got inefficient price action. It's those strong, impulsive moves that we like to see, that we see sometimes, and that is basically what inefficient price action is. Now, the nature of price action is actually to move in an algorithmic way. Now, what this means is price tends to revisit and actually fill in these areas of imbalance or inefficiency. So yeah, like I was saying, looking at this chart example right here, the normal movement that we like to see, obviously the efficient price action sort of demonstrated here, and you can start to see signs of these inefficient price action movements here. You can see there was a very strong movement in between here and here. You know, it was no sort of wave-like movement, it was just one straight move where price didn't really trade anywhere else in that region. Same here, we've got another area of imbalance happening in there, and you can see that price comes back to fill in this area of inefficiency, this area of imbalance right in here. So now we're actually going to have a look at how to exactly measure imbalance on the charts. So when you're measuring imbalance, we want to actually identify the part of the candle that moves very quickly and where, you know, sort of no wicks overlap in the body of the main candle. So right here, you guys can see we've got these three bearish candlesticks right here, and this middle one you can see was very impulsive, very strong. So the best way to sort of measure the imbalance is obviously, like I just said, you want to sort of see the area of the candlestick where there's no wicks sort of overlapping. So in this instance right here, the imbalance is actually going to exist between these two arrows right in here, like so. So in between these two arrows, you can see that the wick doesn't travel higher in this next candle, and the candle before the wick doesn't travel lower than this area. So in this area, price was only moving in one direction. And also a little small tool that I like to use on TradingView to sort of measure imbalance correctly is what's known as this parallel channel right here. So right here in this parallel channel, it's sort of a channel which can measure. So you draw a line across and then you can sort of drag it down, and it will also nicely measure the 50% of the imbalance too, which is also what sometimes price will come back to revisit. So moving on to sort of other terms and other sort of terminology for imbalance. Now obviously, if you've heard other traders talk about the topic of imbalance, you may have heard a lot of different terms used to describe imbalance. Now these are, you've got gaps, fair value gaps, or FVG for short, imbalance itself, displacement, inefficient price action, which is also known as IPA. However, the main thing to really understand is that all of these terms, they mean the same thing. They all describe how fast an inefficient price action can be. So now moving on to how to actually use imbalance areas in your own sort of analysis. So me personally, there are two instances where I will be using imbalances when analyzing. The first is when establishing TPs, and the second is when establishing entries. So let's starting off with the first, establishing a take profit point. Now from what we saw earlier about price moving algorithmically and actually coming back to fill in price, you know, fill in areas of imbalance, we can actually use this information to know that price will gravitate towards these areas. So logically it actually makes sense to use them as targets. So a quick little chart example for you guys of this sort of concept coming to light. This is actually a trade that we took in our live New York session trading call on Wednesday, the 7th of September. And in this example, we were able to sort of see this whole concept come to light. So this was the trade in question which we had, having our entry there, the stop loss there, and our take profit here. But one thing I really want to highlight for this is actually the take profit in this region right here. And there was a very specific reason for placing the take profit in that region. And over here we can see, especially on the 5-minute time frame. So if I'm to cut this down to the replay mode and change it to a 5-minute time frame, we can see in this region here, this is where the imbalance fill would be. So I'm just going to mark out the actual imbalanced area right now. So as we can see, this is where the imbalanced area is. So at this point where I'm about to draw this line, this blue line, this would have been the imbalance fill. And as we sort of exit the replay mode and see where price actually came into this region quite nicely before it gave a big retracement. So you can see how accurate and how precise we can be in actually placing these take profit points. And now moving on to the actual second main reason why when I use imbalance when analyzing a chart is obviously to do with establishing entries. Now, spotting imbalance in the markets is actually a good indication that institutions had a part to play in that specific price region. Now, as you guys know, the market movers, the market makers, or the main institutions, the big players in the market, they're the only people that can actually create these sorts of volatile moves. So spotting imbalances are actually really useful clues in spotting their manipulations that they create. And also, as we know, imbalances like to be filled in, we can actually use this information to place our entries at imbalance fills after we've spotted that correct manipulation. So this chart example right here, we've actually got two examples of where this has actually happened. So in this region here, you guys can actually see the manipulation that happened. We can see the buy to sell region here took out any liquidity above this wick right in here, and we can actually see the imbalance fill right here. So I'm going to depict that by this line. That's the complete imbalance fill, and price comes into it very accurately, very precisely, and gives us the continuation to the downside. So obviously this would be where our entry is at this imbalance fill, and having our stop loss right there, and obviously looking to trade this to the downside. So yeah, there's a really nice example of that there. And again, later on, you know, we spotted the manipulation happening here. We can see this nice sell to buy movement. In the buy movement up, we saw that aggressive move in the opposite direction with this imbalance. And usually the imbalance, if it's in the manipulation itself, if the imbalance is sort of in the form of a engulfing candle, it's a really good sign that this was a really good manipulation to sort of look at. And as we can see, price eventually comes back to fill this imbalanced area in right in there. And as we sort of extend price along, you can see that was a really nice entry area for this movement up to the upside over here. Now moving on to, I think, the final point which I really wanted to make and sort of really sort of explain to you guys is not using, you know, the concept of imbalance blindly, you know, as soon as you spot it, really. So now you know exactly what imbalance is and how to spot it. You still have to be very careful when using it in your analysis. Now, sometimes on a higher time frame, you'll see an imbalanced area. However, when you inspect that exact same area on the lower time frame, the imbalance may no longer be there. So at these areas, sometimes, you know, you may see institutional candles or other candles which no longer have imbalance in them. Usually what I tend to see is new supply and demand, and so either there would be rally-based rallies or drop-based drops in those areas of those higher time frame imbalances. And here we've got a chart example of this exact sort of thing coming to light on GBP JPY on the 4 hour. So what I've actually marked out here on the 4 hour time frame is this piece of imbalance that exists in here. So we can see the actual imbalance within here, in between, in this bearish candle right here, in between this wick and this wick when the price hadn't traded in before. And we can see once we actually go to the lower time frame and monitor this area a bit closely. So let's just jump into the 30-minute time frame, and what we can actually see here is this whole area which at one point looked like complete imbalance. We can actually see a series of drop, base drop, or drop, this redistribution of price, and then it further, goes on for a further drop. Of course, at this point you could sort of refine your imbalanced area. So in this particular sort of scenario, the imbalance would change to this sort of region. So this region right here would be the new imbalance zone. And as you guys can see, the 50% of this imbalance was successfully traded into, and then we saw the continuation down. So we can see, how, this sort of concept comes to light. So there we have the video on imbalance, what it is, how to spot it, and how and exactly when to use it in your analysis. Now, if you guys have enjoyed this video and gained value from it, then please do give it a like, and don't forget to subscribe if you're new around here. Thank you guys so much for watching, I really do appreciate it, and I'll catch you guys in the next video for more of that trading sauce.